My name's Fred McLean. I'm the president of Heritage Investment Group. We started Heritage in 1993 to provide objective investment advice to the clients of an estate planning law firm in South Florida. Over the years, we've grown beyond the law firm and outside of Florida. But one of the guiding principles we've always held, because we started out of a law firm, was that we had to put our clients first, and that objectivity was paramount to our success and our clients' success. We believe the value of advice really lies in two critical areas of trust. First is in trusting your advisor, and the second is in trusting the process that you use. We believe there is an intangible or sort of a subjective piece, and that's really more how you feel about your advisor. Do they communicate well with you? Or do you feel that they're honest? Do you just generally feel comfortable with them? And then there's a very objective piece, and that really gets down to how are they compensated. When you work with a fee-only firm, our clients are paying us 100% of our management fee, which means I don't have any reason to sell them something that's not right for them. And so there's no conflict of interest, there's no product that we are enticed to sell to a client because we're being compensated. And then the second element of trust is really coming down to trusting the process itself. And I would really start by saying to trust the process, you have to understand it. It's a very complex world of investing, and I think the role of an advisor is to take this complex world and simplify it and make it understandable. To see the assets moving up and down when markets get volatile is very unnerving, and you need to have complete faith in the person you're working with. You have to have faith in that they're making the right decisions for you, and you have to have faith that they are creating a great process for you. We had clients come in and they had 17 different accounts. They did not know how much money they had no idea how they were performing, and they didn't trust any one of the firms they were working with. When they came to us, we started talking to them about the concepts of putting the client first, paying the advisor directly, creating a simplified process, and I think that really resonated with them. After 3 or 4 pretty long months of planning, of aggregating their assets and building a very nice, simple, understandable portfolio for them, we were able to take a client who was really confused, who was frustrated and very misguided up to this point, and provide them a sense of comfort because they had an advisor who was working for them in their corner, and they had a portfolio that they could understand. We really believe that the value of advice comes down to trust. Trust in the person you're working with, making sure they're putting your interest ahead of their own, and trust in the process that you employ. But for most of our clients, this is really a very emotional decision for them. It's a lot of their net worth. They don't want to think about their investments on a day-to-day basis, but it's very hard for them to relinquish control to somebody else. The only way they're going to do that comfortably is if they know that there's 100% objectivity in the advisor they're working with and are delivering a process that client really understands.